All right, let's shift focus to one more theme that has really caught the attention of the markets in the year 2025, and it's going to be bigger and better in 2026. That's going to be the VC exits as well as value unlocking through the startup IPOs. So venture capital space has become a very important space in the country because of the backing that they have given to the startups, to the entrepreneurs, and they have now the harvest time of getting their money back that they betted on these entrepreneurs through the IPO route, and many other dynamics of their investment as well as future tech play in the country. Let me welcome two important venture capitalists who will put focus on the outlook for 2026. Let me welcome on NDTV Profit Sanjeev Bikhchandani, who's the founder and executive chairman of Info Edge, and Sasha Mirchandani, who's the managing director and founder at K Capital. Gentlemen, so good to have you on the show. Now, Sasha, my first question to you, how's the outlook for the VC investments in 2026 looking for this particular year for you?
The venture capital outlook remains very robust and strong for 26, and it takes forward from the positive activity in 25. So I feel overall it remains strong. Exit environments have clearly reopened, as you saw at the end of 25, and we expect IPOs to continue in 26. And India's strong GDP growth outlook and place in the world are all positives for the ecosystem.
Right, so robust outlook for 2026, but Sanjeev, startup IPOs were the main theme, and that looks like it's going to continue for this year as well.
Absolutely. I think one of the big issues in VC in India is that you weren't getting exits because strategic sales typically don't happen at a kind of valuation that will make VC investors happy. And IPOs were not happening. But I think post the Zomato policy with the IPOs, from then onwards, and there was a steady number of IPOs. And this last year was a very good year for IPOs. There were more than 40, I believe, many of them new age companies. I believe the pipeline remains robust. I think India today is possibly the best market in the world for IPOs below $4 billion. Because NASDAQ has become so large that if your market cap is less than 4 billion, nobody talks to you. Investors, research analysts, nobody's interested. And for the smaller companies, the smaller IPOs, India remains like very, very good market, the best in the world. So actually, India, if the government, if SEBI handles things right, can be a global destination for IPOs, NASDAQ and India, and that is a really good thing.
So Sanjeev, being one of the pioneers as a VC investor in India, a very big comment coming in from you that India has become the startup IPO world, country of the world. So Sasha, definitely you are smiling year to year on this. What is your exit plan in your portfolio through IPO?
Yes, so we have a couple of pipeline IPOs in place for 2026, whether it be the beginning or mid or later, time will tell. For companies like Zetwork, Fractal are in the pipeline for us. As you know, other high quality companies like Zepto, Oyo, etc., also in pipeline for 2026. So it looks robust with solid businesses.
All right, so a strong IPO pipeline and K Capital also there. But Sasha, there has been a lot of debate on the valuation concerns as well. How has been your experience on the valuation mismatch in the past?
Yes, so we did one strong IPO in the last cycle, which was Nazara. As you see, Nazara has performed really well over the last couple of years because it's very well-run, profitable business. And I think that theme continues into 26. If you're well-run, profitable, unit economics is strong, the market gives you a good price. And that's what's happened with Nazara. In the US, we had done Zeta Global, which had IPO'd last year. So overall, if the company is well-run like these two companies, you've seen very good outcomes for us.
So VC exit as well as value unlocking is fine, but Sanjeev, for a more sustainable IPO play for the startups, don't you think that the valuations should be a lot more balanced to keep something on the table for the new investors?
I think I've always sort of maintained, and at Info Edge we've always maintained that don't be aggressive on pricing because what you don't want is your IPO underwater post-listing. That is not a good narrative. That is a failed IPO. If investors get hurt, the ones who come in the IPO. It's not a good thing. So it's good to be a little conservative on pricing and let there be a decent pop in the aftermarket. And as the company grows, valuation will take care of itself.
So, Sasha, as Sanjeev mentioned, that the IPOs will have to be priced much better for this whole controversy and the debate to really stop around startup IPOs. Majority of these startup IPOs are trading below the IPO price. Only in the last year, we have seen some really hold above the IPO price. What is the solution in your view?
There was also a lot of exuberance in 21, 22 when some of these companies listed, right? So they were way more valued than they should have been. So they've kind of climbed back into their valuations over the last couple of years. This cohort of late 25, I think, as Sanjeev rightly said, valued themselves quite fairly and even took, small haircuts if required to make sure that the pricing was fair to all investors, including the new investors in the IPO, the retail investors, who I believe strongly should be making money in your IPO. So you must leave something on the table for them.
Right, but what will also create the next generation of value creators? But because it looks like, Sanjeev and Sasha, that one whole value chain has already been capitalized upon. What's the new wave of technology and new ideas that you're really building on right now?
First, I want to agree with Sanjeev. All my life, we've been investors focused on the entrepreneur. And like Sanjeev, we are very long-term investors, at least 12 years minimum, hold periods, if not 14 or 15 years. But some of the themes that we like, at least for the next cycle, are manufacturing, industrialization, AI, intelligent automation, cybersecurity, frontier tech slash deep tech, rising domestic consumption, as you know. So these are some of the themes we are looking at for 2026.
Right, and what is your investment strategy then, Sasha, for this year?
Yeah, we continue to be a very early stage focused fund. The first $2-3 million is what we like to do. We are first investors in most companies that we fund. It doesn't have to be institutional, with the first investors. That will continue across the themes I just mentioned.
One important aspect I wanted to also check, while there is a lot of concern around the global economics for the year 2026, and we've seen FIIs, FPIs pull out of India as well, is LP fundraising a concern for 2026, Sasha?
I think, first of all, one, India remains a big positive for most LPs for us. I've traveled the world in 2025 just talking to LPs to understand sentiment. I've never seen India more at the top of the scale than in this period. The genuine enthusiasm with a lot of logic around it. So therefore, that's good news for Indian GPs like us. One of the key things is ROI on AI. I think that's a big thing. The hyperscalers have been spending a lot of money. So now people are looking for ROI. Companies like ChatGPT, Anthropic, etc., will go in for large IPOs, SpaceX, etc., in 2026. So that's going to be interesting to see how these IPOs happen. There could be humongous IPOs, literally hundreds of billions of dollars raised among these companies. So overall positive, but AI, are we going from the hype to reality, or is it going to continue to be hype? And that's where the concern is. And therefore, ROI and AI, I feel, are companies at the enterprise level actually using AI will be tracked very carefully.
Right. So you raised a very important point, Sasha, and I'll take that same question to Sanjeev. What about AI capability, and is it overhyped, Sanjeev?
I have a comment on AI, Nisha. See, and the funds going in there. You see, a lot of these LLMs and these big investments in AI have not happened from venture funds. They've happened from the balance sheets of large operating companies, from their profit flows. For them, therefore, it is not a VC investment from a fund which you have to have exit in 7 years or 10 years. It's a strategic investment from their balance sheets where they are in a war that they have to win, they will not give up. So to that extent, while valuations may seem high and a large amount of money may have gone in, is it a bubble that's going to burst? I don't know, because these are all players with a lot of staying power, and they can keep on investing, and they need to win, so they will keep on investing. So I don't see it ending very soon as a bubble bursting.
Yeah, I would agree, because this money is really coming from their bench. Yeah, go ahead, sir. No,
Carry on.
no, I just want to agree with you that the balance sheets of these companies are very strong, and from this cycle, the money for most of this is coming from their strong balance sheets, unlike in the past where it was debt or some sort of loan to really raise capital to throw money away. This is coming from very strong balance sheets of these top six companies. Therefore, I agree with Sanjeev that it's not going to be a situation where it's going to suddenly collapse.
All right, it's not going to suddenly collapse, but there is some semblance of a bubble when we talk about AI valuations. And those were some very important takeaways coming in from two very, very big investors and venture capitalists and the startup experts, Sanjeev as well as Sasha. Always a pleasure to speak to you right here on NDTV Profit.